Hello everyone, myself Nazia Hasan. I am an assistant professor at TMIMT Tirthankar Mahavir University, Muradabad. I welcome you all in today's session, which is based on a subject cost accounting. In the previous sessions, we covered many aspects related to cost accounting, like basic concepts. We talked about the elements of cost, we talked about the overheads, we talked about the cost sheet. Now, moving on further, in today's session, we will discuss about what actually cost audit is and what is material control. First of all, let us focus on what is cost audit. Cost audit is a systematic study of companies, organizations, expense accounts and records. It ensures that the cost of its products or services has been correctly categorized and computed. Cost audit is basically examining the entity's expenses records and other related information. Cost audit or any audit forms the very important aspect of any organization's working scenario, where it authenticates whether the expense which has been done on certain basis, and it assures that no wastage of resources has been done on the organization's part. The major goal of cost audit is to assure stakeholders such as shareholders, management and regulatory authority that a company's cost information is credible, reliable and is applicable by legislations and standards. Next is objective of cost audit. What are the objectives of cost audit? We will study one by one. First is verifying cost data and accuracy. A cost auditor checks a company's accounts and records to confirm that the reported cost data is accurate, dependable, and free of substantial misstatements. It is a duty of a cost auditor to see if the data provided by the organization on the basis of cost is reliable, accurate, and free of errors. Next is identifying inefficiencies. It identifies where a firm is doing needless expenditure or where a manufacturing process may be improved to decrease the cost. With a cost audit, it becomes possible to identify areas where over maximum utilization of resources is done, and where minimum utilization of resources can be implemented without compromising the quality of a product. Next is ensuring regulatory compliance. A corporation, while preparing any kind of cost statement, has to follow certain norms and guidelines. With cost audit, it is possible to identify whether such norms and guidelines established by the government authorities or professional organizations has been followed by the company or not. Next is improving decision-making skills. It gives executive a better understanding of the cost structure of the organization. Furthermore, it enables them to make better educated and cost-related issues and their judgments, which can be seen in their efficiency. Next is benefits of cost audit. Cost audit carries many benefits. It has benefits to management, it has benefits to society, it has benefits to shareholders, it has benefits to government. We will study the benefits of cost audit one by one. Benefits of management. With cost audit in scenario, management receives many benefits. It receives trustworthy data for its daily activities such as price setting, control, decision making. It also keeps a close check on all the wastages if there is a reliable reporting system in a place. It assists the management in taking remedial actions and identify where the quality of a product has been compromised. It gives manager their own set of tasks, and management by exceptions becomes possible with cost audit in the system. The standard costing method and budgetary control are made much easier with the cost audit. A business can set up a trustworthy check on the closing stock and work in progress valuation. It helps in the detection of frauds and errors in the costing process. Apart from management, cost audit has a numerous benefits to the society. It can be cost auditing is directly or indirectly is a part of a price fixing. As a result, according to information from the cost auditor, setting prices protects customer from being taken advantage of. Given that certain sectors of the economy forbid price rises without a valid rationale such as rising manufacturing cost, preventing price increases will lower inflation and sustain economic consumer living standards. Next is benefits to shareholders. Apart from management and society, cost audit also has benefits to shareholders. A cost audit makes sure that the accurate records are kept about the acquisition and use of goods, salary cost, etc. Additionally, it makes sure that work in progress and closed stocks are fairly valued. Companies may guarantee their shareholders a reasonable return on investment in this way. When the cost audit is done, it also has certain benefits for the government of country. What are those benefits? Let us study one by one. When the government is engaged in a cost plus contract, a cost audit helps in determining a fair price for the contract. It establishes the maximum pricing for necessities, preventing unauthorized profiteering. The government could focus on the departments which have been ineffective for a very long period of time due to cost audits in the system. It gives government the option to decide to take decision on a certain particular business which need to be preserved for the sake of the country. It makes it easier for government requested trade disputes to be resolved. Cost audits and ensuring management decisions might encourage wholesome rivalry among the many businesses in the sector. As a result, inflation is automatically controlled. Apart from benefits to management, to society, to shareholders, it also to government, it also has certain drawbacks. Cost audit have many drawbacks in addition to their numerous benefits. Among the most important drawbacks are the following. Cost. Carrying out a cost audit may be expensive and time consuming. Not everyone is proficient in conducting such an intellectual type of audit. So we need to be hired very professional people, very professional auditors for this procedure, and their cost can be very expensive to the organization. Complexity. A cost audit entails a thorough investigation of the cost accounts and records of a firm, which can be challenging and call for a higher degree of competence. Next is management position. Businesses may see cost audit as an intrusion into their business operation and oppose the audit process. As a result, management might not cooperate as expected, which would make the audit process less efficient. There can be a difficulty in fraud detection. A cost audit is ineffective for fraud detection. As a result, it may be challenging for auditors to spot fraudulent actions, particularly if they are well masked. So, people who are carrying the audit should have a very in-depth knowledge of conducting audit from organization to organization. Otherwise, there would be very difficulty in fraud detection. Limited scope. It only considers the operational cost of a corporation. It doesn't give a whole picture of its financial success. It only, when audit is done, it only sees the aspects which are related to the cost of the organization. It doesn't have any command on the financial position of the organization. Reliance on past data. past cost data is the foundation of cost audit, and if any further error is there in that past data, that will be automatically be carried forward in the audit and will continue for a longer period of time if not detected at a proper time. Future market circumstances or trends that might impact the price of goods or services are not taken into account. Next is cost. So we basically covered what actually cost audit is, what are the objectives of cost audit, what are the drawbacks of cost audit, and what are the advantages of cost audit. In a brief, I would say cost audit consists of various elements like checking the cost accounting records for the correctness of cost accounts, cost reports, cost statements, and cost data. Examining these records to ensure that they are by cost accounting principles, plans, methods, and objectives has become a mandatory requirement nowadays. Therefore, the cost auditor approach should guarantee that the cost accounting strategy adheres to the organization's objectives and that the accounting system is directed toward achieving these objectives. The cost auditor should also prove the accuracy of the statistics by vouching for verification, reconciliation, and so on. Therefore, these elements, these important aspects need to be looked on before cost audit is done so that cost audit can benefit organization in a long term. After covering these aspects related to cost accounting, let us study what is material control. As we have already covered in previous sessions that among various elements of cost, three elements of cost were covered. First was material, another was labor, another was expenses. Material, we already know it is an important part of any product, and material control has become a very area of concern for any kind of manufacturing concern. So what is material control? Material control is a systematic control over purchasing, storing, and consumption of materials to maintain a regular and timely supply of materials, at the same time avoiding overstocking. What is material control? It is the process of systematically controlling materials over the stage of procurement, storage, and usage so as to help maintain the regular and uninterrupted flow of materials in the production pipeline. No system of costing is complete without an effective material control. Material control ensures that the provision of required quantity of materials of the required quality at the required time with minimum capital investment. So basically it is related to minimum wastage of resources with maximum utilization of resources. Material control. Material are all the commodities consumed in the production department to produce items directly or indirectly. And inventory is a common term used for raw materials, components, work in progress, and finished goods stocked in the store. Often there is a confusion that what is material and what is inventory. Materials is all the commodities in the production department to produce items either directly or indirectly, while the inventory is a term used for raw materials, components, work in progress, and finished goods stocked in the store. Materials are also vital for calculating the cost of production. An efficient material control system helps to substantially reduce the cost of material and in this way limits the production cost. Systematic and effective control over material also helps to maintain production schedules, meet market demands, and avoid excessive investment in inventories. are the advantages of material control? Material control in itself has many advantages, as material forms the uh, important part of any product. Material control is defined can be seen as making available at the minimum cost the required quantity of quality material in a timely manner and at the right place. In order to have an ideal system of material control, a higher level of coordination between purchase department, store department, and production department is very, very important. There are various advantages involved in material control and which can be studied over here. Continuous supply. A continuous flow of input materials is ensured by the system of material control so that production and service departments can function without any kind of obstacles. Next is optimum investment. Investment in various inventories is kept at optimum level, taking into consideration the operating requirements and resources. Thus, it helps to minimize the carrying cost. Procurement at minimum cost. Purchase of quality materials and other inputs at the minimum rate from a regular supplier is ensured under the system of material control. Minimum total cost. There is a reduction in total cost which includes ordering and carrying cost under the system of material control. Next is avoid wastage and losses. Wastages during the storage and usage of materials due to various factors is avoided due to a great extent when a efficient material control system is applied in the organization. Proper records. The system makes sure accurate and up-to-date record keeping of inventories. Provides information. The system ensures providing requisite information with regard to the inventories to the management promptly, which facilitates decision making by the management. Prevent lax time of production. Uninterrupted supply of material and other necessary inputs ensure that there is no lag time of production. We will study the following techniques of material control, which are determination of levels, ABC analysis, EOQ analysis. Let us study them one by one. First is determination of levels. There can be various kind of levels of a stock and which are necessary to be studied in order to have an efficient material control system. First is reorder level. What is reorder level? It is a point at which if a stock of a particular material in store approaches, the storekeeper should initiate the purchase requisition for fresh supplies of that material. This level is fixed somewhere between the maximum and minimum level in such a way that the difference of quantity of materials between the reordering level and the minimum level will be sufficient to meet the requirements of production up to the time the fresh supply of material is received. Reordering level can be calculated by the help of the following formula: minimum level plus consumption during the time required to get the fresh delivery. Next is minimum level. What is minimum level or safety stock level? This level represents the minimum quantity of material which must be maintained in hand at all times. The quantity is fixed so that production may not be held up due to the shortage of material. In fixing this level, there should be certain factors which need to be considered. First is lead time. This is a time lag between intending and receiving of the material. It is the time required to replenish the supply. Next is rate of consumption of the material during the lead time. Nature of the material, and minimum level is not required in case of a special material which is required against customer's specific order. The formula for calculating minimum level is given below. Minimum level is equal to reorder level minus normal consumption into normal reorder period. Next is maximum level. It represents the maxi quantity of item of material which can be held in stock at any time. Stock should not exceed this quantity. The quantity is fixed so that there may not be overstocking. Basically, the work of maximum level is to ensure that there is no overstocking of materials going on in the organization. Overstocking is extremely necessary to avoid, and if overstocking is done, there can be many advantages which comes to the organization. It blocks the working capital, which could be it need more space in the godown, so more rent will be paid as overstocking is done, and there may be loss due to obsolescence on account of overstocking. And there are chances of reduction in quality also, because large stocks will require more time before they are consumed. So overstocking carries lots of dangers. Apart from that, there can be reduction in the market value of the stock because of the overstocked material. Maximum level should be fixed by taking certain steps, that is amount of capital available for maintaining stores, godown space available. These things should be checked from time to time to avoid the maximum level. Profitability of loss in stores by deterioration, evaporation can occur in case overstocking is done. So, the formula for calculating maximum stock level is equal to reordering level plus reordering quantity minus minimum consumption into minimum reorder period. Another level, maximum stock level can also be very dangerous to the seasonal nature of a product. The seasonal nature of a supply of materials. Certain materials are available only during specific periods. So these have to be stocked heavily during these periods. So maximum level has to be checked from time to time so that no harm is done to these seasonal products. Next is danger level. This means a level which normal issues of the material are stopped and issues are made only under specific instructions by the supervisor or the manager of the organization. The purchase officer will make special arrangements to get the materials which reach at their danger levels so that production may not be stopped due to shortage of materials. Next is danger level. Calculation can be done with the help of the formula. Danger level is equal to average consumption into maximum reorder period for emergency purchases. Next is average stock level. Average stock level is equal to minimum stock level plus half of reorder quantity or half of minimum stock level plus maximum stock level. So these are the different levels we have studied. Again, let us brief about them. Reorder level, minimum level, maximum level, danger level and average level. Reorder level, as we all have studied, it is a point of stock of a particular material in a store. If the reorder level, the storekeeper should initiate the purchase requisition of fresh supplies of that material. Next is minimum level. This represents the minimum quantity of the material which must be maintained in hand at all times. Next is maximum level. Maximum level is actually the maximum quantity of an item of material which can be held in stock any time, and the stock should not exceed this level, otherwise there are chances of overstocking, and overstocking can lead to in turn other many negative results for an organization. Next is average danger level. Danger level, as we have discussed, it's a normal issues of material are stopped and issues are made only specific instructions. The purchase officer will make special arrangements to get the materials which reach at their danger level so that production may not stop due to shortage of materials. Average level, it's just the average of a stock which can be easily calculated with the formula given. Another method of material control is ABC analysis. ABC analysis classifies inventory items into three categories based on their value and importance to the business. A. High value items, B. Medium value items, and C. Low value items. We can understand with the help of a given diagram. A. Essential goods with highest value, goods with slighter higher value, and least valuable goods. Let us discuss ABC method in a detail. ABC method of inventory control involves a system that controls the inventory and is used for materials and throughout the distribution management. It is also known as selective inventory control or SIC. ABC analysis is a method in which inventory is divided into three categories, which is A. Having highest value, B. Lowest are lower than the A category, and C. ABC method of control has become an essential part of any material control system. ABC inventory analysis is based on the Pareto principle, which states that 80% of the sales value are generated from the top 20% of the items. It means that top 20% of the items will generate 80% of revenue for the business. It is also known as 80-20 rule. Why there is a need for categorizing these items into ABC category? In ABC model of inventory, items categorized under A are goods that register the higher value in terms of annual consumption. It is interesting to note that 70 to 80% of the yearly consumption value of the companies comes from only about 10 to 20% of the total inventory items. Hence, it is crucial to prioritize these items. Next is B category. These are the items having slightly higher value but are lower than A category. These amount about to 30% of the total inventory in a company, which accounts for 15 to 20% of annual consumption value. Next comes the item C. The items placed in this category have the lowest consumption value and accounts for less than 5% of the annual consumption value that comes from about 50% of total inventory items. Now, what is the reason behind ABC analysis? Basically, item A, these are subject to strict inventory control and are given highly secured area in terms of storage. Like for example, take a jewelry in our house. They are having minimum quantity but are having a very high monetary value, and they are given high security in our houses so that we can protect from any kind of damage or theft. These goods have a better forecast for sales, and these are also the items that require frequent reorders on a daily or a weekly basis. They are kept as a priority items and efforts are made to avoid unavailability or stock out of these items. Item B, these are not as important as item A, but they are more important than item C. The most important thing to note is that these items lie between A and C, and they are monitored for potential inclusion towards category A or in a contrary situation towards category C. Next is item C. These items are manufactured in a very less quantity and follow the policy of having only one of its item on hand, or in some cases they are recorded when they are reordered when a purchase is actually made. Since these are of low demand goods with a comparatively higher risk of cost in terms of excessive inventory, it is an ideal situation for these items to stock out after each purchase. These questions managers find themselves dealing with when it comes to items in category 3 is not how many units to keep in stock, but rather whether it is even needed to have to these items stored at all. So these kind of C category items, they are least valuable goods and they are larger in quantity, but it is becomes often a challenging task to manager how much category C items need to be kept in an inventory and how many units to be stocked when it comes to C category items, or not to store them at all. Now, what is the use of this ABC analysis? The ABC analysis is widely used in supply chain management and stock checking and inventory system, and is implemented as a cycle counting system. It is important for companies that seek to bring down their working capital and carrying cost. This done by analyzing the inventory that is in excess stock and those that they are obsolete by making way for items that are readily sold. This helps avoid keeping the working capital available for use rather than keeping it tied up in unhealthy inventory. When a company is better able to check its stock and maintain control over the high value goods, it helps them to keep track of the value of the assets that are being held at a time. It also brings order to the reordering process and ensures that those items are in stock to meet the demands. The items that fall under the C category are those that slow moving and need not to be reordered with the same frequency as item A or item B. When you put the goods into these three categories, it is helpful for both the wholesalers and distributors to identify that need to be stocked and those that can be replaced. For example, HM manufactures 80% of its retail advance in inventory. HM manufactures 80% of its retail inventory in advance and introduces the remaining 20% based on the most current market trends. Similarly, you can see Amazon does not keep stock of every single item offered on its website. The stock of only the popular items that are frequently purchased are maintained. If there is an order for an unpopular item, then Amazon would request it from a distributor, would then ships it to the company. So as we have learned from the example of Amazon, that it does not keep a stock of each and every product which can be in demand. Similarly, it on random basis, it asks the distributor to supply the product product from the distributor to the customer on the demand basis, because it cannot afford to keep the stock of that particular product. So in today's session, we covered determination of levels. We then discussed about the ABC analysis in a very detailed manner. That's it for the today's session. Thank you so much.